Good morning. How's everybody doing this morning? Hey, Petra, how are you? Good to see you. So let's take a look and see how this new contract is treating us. So our overnight inventory is short. It's probably around 99% short. All of the trading is underneath yesterday's close. Now, yesterday I told you guys at the close, I said look for lower in the overnight session. And you'll see that. Now, why did I say lower in the overnight? Because yesterday we had a short squeeze. And you'll notice where the shorts were trapped is where the sellers are tonight. It's kind of interesting. So the base of the P profile is where traders were trapped short yesterday. The night market allows them to come in and cover, right? Because you don't have that markup buying that you get during RTH, right? You have less participants at night, so there's less bids. When there's less bids, the market has a tendency to sell off. And that selling off is great because what it does is it balances out the folks who got short from here in this contract change. Like if you look at here's yesterday's night session. And this night session was just something else. It got people, see, it took out the previous day's low and it got a ton of people short down here. And even from the day before, there is a long position here, but a lot of people got short underneath 60.50. And market profile is actually a really beautiful way to see that because if you look at the top of the value area, you can see it's right at the overnight low of tonight. Pretty cool, huh? So that's where the covering bids came in. They came in here, right? And then the market moved up back over 60, 65. We're trading 72 now, right? And we are correcting overnight inventory upward. Okay, now for people who aren't market profile people, it's kind of difficult to understand this, but these profiles, what they do is they lay out a structure. And the structure is of the transactions. The transactions show us the movement of inventory. That's all a chart is. A chart is just a simple chart that shows us the movement of inventory. Distribution, accumulation, accumulation, distribution, right? So you get accumulation down here, distribution up here, and what helps distribution at a higher price for money, for profit, is if you get people short. If you get people short in a cost basis, think about it. This is where all the long players are positioned, right? So if you're short in the cost basis, when they go up, when they take the market higher to sell for a profit, do you see how the trap works? Do you guys understand that? For people who like to short a market, think of it this way. This is the warehouse. This is Walmart. This is the highway. So if you're shorting in the warehouse, You are selling goods that you don't own at wholesale prices. Then when they get retailed out, you're forced to cover higher. Hopefully that makes sense, right? So what you want to be doing is you want to short the back end of that move, not the front end, right? This is where you take the goods, you drive it to the store. Then when the store needs to put it on sale and take it to TJ Maxx, that's when you short it, right? You want to short when prices are going lower, not when prices are going higher. When prices are going higher, this is used for size traders to sell size, to distribute size into this move. This is meant for you to short, right? And trying to catch this move, let the sell start. Wait for the sale. Once you see the sale, like in the overnight when we opened, went above the close and came back in and couldn't get above the close, that's when you put in your short. So if you're a larger trader or if you're trading position, you short, say, 85, 80, your stop is at 90, your first cover is at 71, right? Because if you lose the seller here, the market's going to rotate up. Always make sure that you have a seller before you short. If you can't identify a seller, don't short. That means you're in this part of the move. And the more often if you actually look at markets that way, it'll really help you understand how they work, and then you won't be shorting in the hole so much, right? Especially in a market that has limited supply. It's very hard to short consistently, right? So let's go take a look. Here's our overnight. We already had and then here's another clue. This J period in market profile, that's usually when inventory corrects lower. If you notice today, J period opened, went to yesterday's low, and then rotated up. That means there are shorts that are trapped right here for now. As we wait for London to open, let's see if we can take out yesterday's low on the downside, okay? I've got my balance ranges here. Balance is 60, 62 and a quarter to 67 and 3/4. Double it to the upside to 78. Double it to the downside to 51 and a quarter. Right? Our overnight point of control, where all 70% of the inventory is priced, is just under 60, 65. Okay? We are selling it at 71 for profit. No, J it's not a weak low. It's what the old guys call a mechanical low. Now, a mechanical low, right? The saying is, if there was size, like say you went to that low with J period and you went to try and sell 5,000 contracts, then it would break. The reason it did not break is there was not enough size to break it. So that's what they call a mechanical. Um, yeah, it's not a strong low. So what that means for us, what's the practical, is that we watch that low in the next couple of sessions. And if that low holds, you'll get rotation upwards, right? But we did not have enough size to take out the previous day low. So maybe there was 1,000 contracts for sale here. There was 500 here, 300, 200, 100, and then nothing. Right? And then as soon as the market saw the buyers lined up underneath the previous day low, they lifted price back up to take advantage, right? One way of helping is to think of these levels as a glass door, right? So say you bought all this inventory and you're selling it. When you get to the door of the store, like it's a glass door, and you see people lined up outside waiting to get in your store, you raise price. If you see people getting back in their cars and leaving, you chase them out and you offer them lower prices. Does that make sense in a practical manner? Because that's really all it is. I've been doing a lot of thinking about trading and why traders have a difficult time. And it's because they don't understand any sense of urgency in the business. You see, when you're on a floor or when you're on a trade desk, there's a sense of urgency to complete an order. See, if we were on the floor together and I was coming out and selling 74 and somebody went to undercut me and go 73 and 3/4, I would push them out of the way and go 73. They would go 72 and 3/4. I'd go 72 half. And we would compete. Why are we competing? Because we have inventory that we want to get out the door and turn into cash, right? You guys realize, and nobody ever talks about this, the goal of the market is to turn inventory into cash. That's the goal of a market. It's not for you guys to make money. It's for us to sell you stuff. And there's more than one seller, so we have to compete with each other to capture the buying. Right? So when that competition occurs, it's a violent process, which is not translated in chart-based trading. If you were on a trading floor and somebody tried to undercut you, you'd punch them in the throat, push them out of the way, and take their customer. You would do whatever it takes because they're taking money out of your pocket. You don't get that sense of urgency in retail trading. Right? I've literally gone into a trading room with a baseball bat and threatened people. Right? I caught one of the traders shorting our deal, one of my clients' deals, and I literally took a baseball bat and threatened to bash his head in. There's a sense of urgency because if you don't do that, you lose a client that makes you $100,000 a month in commissions. Right? There's a sense of urgency. None of that is portrayed in this. It just looks like stuff going up and down, right? I remember I had one of my guys, he goes, "Oh, it's just pushing buttons." Right? I'm like, "No, it's not pushing buttons." So that's why you sell into strength. Right? So if you're long 68, 69 against that 67 and 3/4 and it gets up to 73, you know that there are sellers here. Right? Because they've been there before. Right? It's like they leave breadcrumbs. Right? So if you know that there's sellers at 73, sell at 72 and a half. Right? And undercut them. Right? You always want to front run the other sellers in a market. That's smart business. Right? You don't hold on to trades like you found, it's not like you found a rare book or something like that. The trade is a simple business transaction, right? In choppy markets, it doesn't make sense to hold trades longer, especially if you have a small account. I hope the practicality makes sense for you guys, right? You want to take practical information and put it into your trading. And if you don't understand that there is a sense of urgency, right, to when you're long or when you're short, because you're competing against other traders for the product, right? If you're short, you're competing with other buyers. If you're long, you're competing with other sellers. So you have to figure out where they're going to come in and screw with your business, right? And get out before they take your buyer or they take your product, right? So when you're long, you're a seller of product. and you have competition that are trying to take your buyers, right? You don't realize that when you're trading one or two micros, right? If you were working a position, like say a client calls you up and goes, JJ, sell 200,000 shares of this stock. And then he calls you back in half an hour and go, how many have you sold? And if he doesn't like the answer, guess what? You're never going to get another trade again. There goes your business, right? And that's why I trade quickly, right? Because of sense of urgency, right? A slow trader is a useless trader, right? What do they say? A slow trader is an investment banker. Sorry, that was an old one. Uh, yeah, yeah. A slow trader is useless. Nobody wants a slow trader, right? Because it means they're going to cost you money, right? So have a sense of urgency when you transact, right? Which means don't go into a transaction without understanding what's going on before you go into it. None of this is random, okay? So right now we're distributing above 67, right? The product is priced at under 65, okay? And we're selling it at 69. If we run out of buyers, the market will go back under 67 and three quarters and back down to VWAP, right? Which is this purple line right here, right? So how markets work is large traders accumulate under VWAP, right? So we accumulate under VWAP and we distribute above. And when we put it on sale, we'll come back to our cost basis, right? So that's profit and that's back to cost basis. Now, if conditions get bleak, we got to put it on sale. So this is TJ Maxx, right? This is the discount store. We have to sell it less than what we paid for it sometimes. Does that make sense? If you can visualize these things, it really will help you keep some sort of direction when you're trading. Right? Are you gonna buy a market at the top of a profit zone? Are you gonna short a market at the bottom of a cost basis? Guys in the room, give me some feedback. Does that work for you guys? Cool. Now we had contract rollover yesterday, and we're still rolling, so there will be a discrepancy. There'll be still some volume in the old contract. Let me see here. So if you look at it, the new contract has 95,000 contracts traded. The old one still has 60,000, right? So there's still some volume in that old contract. So we're in that rollover process. And we're back to VWAP. Now see that, remember that J low that Umar, remember you asked me about? Now we're going to come test it again. There it is. And it broke. I'm going to do a little test short here. I'm short one at 66. I'm offered at 66 and a quarter. I have not gotten taken. I'm going to do a little test short. I'm going to go put a 64 and a half bid in, and I'm short one at 66. And my out is basically like 67 half, 67 three quarters. Right? Let's see if I can sell another one at 66 and three quarter. I mean at a quarter. Nope. Didn't get taken. Good stuff, Johnny. Account recycler. That's good. What do you recycle? I recycle plastic. What do you recycle? Accounts. That's hilarious. Good one. Again. All right, so we need that seller to keep stepping in. We need those candles, the highs of those candles. If you're short, you want to see them lower. There's a kind of a warning level right there. All right, I'm gonna move my buy up to 4 3/4 and see if I get a fill. Damn, I'm out. Stopped out. Caught a bid like crazy, eh? I'll hit it again. Let's see. If we get under VWAP, I'll hit it again. I'll wait for the next candle. If we no, see, that's a good thing I waited for the next candle. So I was going to hit it again on the short side if this candle opened and stayed under VWAP, which it didn't. Right? I was looking for sellers to step in under 67 and three quarter, Jeezy. Then they did for 2 minutes. But then I lost my seller. Right? I lost my seller under VWAP, which means they see buyers and they're increasing price. So there's no reason for me to be short. Right? I know it's a little persnickety right here, but that's my first trade of the day on one coffee. So I'll watch this, and when it's going back and forth over VWAP, sometimes the order flow is unpredictable. Like if VWAP wasn't here, it'd probably be a much better short. So now I'll wait. Instead of just flipping to go long, I'll see if we can climb over 67 and three quarters. Right? If it's choppy, I'll just sit and wait it out. There's no reason for me to go back and forth and back and forth. That way you save money on stop outs. Right? Let the larger traders work this level out. And if it gets above 68, maybe it's a look above it, look below and fail. Right? We found the bid for now, exactly, right? So I was short, it hit the bid, told me don't be short anymore. Right? Now it could and the frustrating thing is sometimes it'll do that for a couple of minutes and then drop. But hey, that's the business, right? Nothing's ever guaranteed. But if you manage your risk, right, it at least keep you from over trading a choppy area, right? First trade of the morning I took, right? And I'd rather spend 10 bucks, 15 bucks. Maybe I'm trading a little early. Maybe I'm not waiting for the right setup. So what I should do now is I should wait for either this or this. Because the short's not really clear right now. Right? And overnight inventory is still short. Maybe I should just sit tight for 4 minutes until the next half-hour bar opens up. See, there's also that previous day low is right here. So there's always there's order flow back and forth. You got VWAP, the previous day low. Just chill out and see if we can actually get lower than 65 now. A lot of the times I'll be too early on a trade. And where I made my mistake was I didn't wait for the look above and fail. I saw this and I immediately went short, right? Thinking that this was going to happen, and I was too early. Then it looked above. That's when the seller really engaged. But how much follow through? I might have gotten filled at 65. Probably not at 3/4. That's the trade I wanted. See? I was too early. No biggie. Just not clued into the market and dialed in as much as I should be. That's exactly the trade I wanted. Right there. Too early. Right? Yeah, I was just too early. That's my biggest thing in trading is I'm too early. A lot of the times, especially on shorting, I'm too early, right? And that is something I have to work on consistently. The reason I'm too early is because I've been trained to be a really fast trader. And sometimes in retail trading, that can get you into trouble, right? You're like, well, JJ, you said you should be fast. Yeah, you should be fast when you're selling, right? Right? Once you're in the position, get out of it, right? Turn it into cash. But maybe to execute and enter a position, sometimes you have to be a little bit more cagey, like a little bit more shrewd, right? That's okay. The biggest thing is to admit you're wrong quick, right? Because that could have easily gone the other way because inventory is short, right? The overall overnight inventory is very short. So now it's kind of doing the same thing here as here. Let's see what it does. Right? I don't mind being wrong. It's not a big deal. So this is the back end of the move, right? This is the front end, distribution, back end. So now London's opening. Now if London doesn't take out, that K low, it'll rotate back up to the point of control. So I'm long. Where am I going to get long here? I'll try 62 and 3/4. And I know there's a seller here. So I'll go put a 4 out. Ooh, nice. Second one I'm selling at 65. I got one left at 62 half. And I'm out at 64 and a half. There we go. So finally got it together, right? Look below and fail, right? Nice, right? So you can be wrong. Don't spend a lot of money on being wrong, so when you make it back, you can go positive, right? And that's really, I guess that's the lesson for today, right? That's a nice look below and fail. Look below of 62 and a quarter and fail. The next candle comes back up over it. So I just bought a few contracts at 2.5, 2 3/4, and sold one at 65, and the next one's up. Yeah. So there you go. Now, had I been all rattled by this stop out, I would have never seen this clearly, right? And remember, I told you I should have been looking for this or that, and this is what this is what paid. Practical, practical stuff. There's going to be sellers at 69 and a half. And back down. We might just rotate between 2 and 7. But just go back and forth between 60, 62 and 60, 67 kind of thing. If it's slow. Now let's see if we rotate back down under 65. There's 65. Let's see. There we go. Now there's that rotation down. There we go. Now I know a lot of you are tempted to buy it, right? Everybody, that's human nature, right? To buy it because you see this bounce. I want to see it go below this level and come back up. For me, that gives me a bit more assurance that the sell orders are done. See how it goes underneath the level? And I'll wait for the next candle. There we go. See if it holds 62 and a quarter. Just take it easy. Don't need to jump in just yet. Yeah, it's not bad, eh, Johnny? Yeah, this new contract's not bad. So I'm watching this stop here. Do we take out 60? Now it's going through a little bit of chop. Let's see what it does. Seller at just under 64. There they are. Take it again. Let's see if it can hold 62 and a quarter. Right. Now you might have some more sellers here. So if you're long, I'm long 63. I'm out 64 and a half. Just on one. But there's the same trade again, folks. There you have it. That is the look below and fail. If we take out 60-60, it might be, Johnny. It's kind of in regular circumstances, I would think so. Um, with these two contracts trading at the same time, it's a little unpredictable. Like I wouldn't short the world, right? If it gets under that low, it comes back up and hits it. But at least for the time being, exactly. Yeah, you're right. Right. I'm very careful not to go black and white, yes or no, especially at contract rollover. Contract rollover is a weird time, and all this stuff expiring. Um, so I know I sound a little bit uh, wishy-washy, right? Um, and that's because I'm always trying to go, okay, but it might do this, it might do that, but it's a little unpredictable. One thing that is predictable is where the sellers are, right? And it's always good to mark off where they came in before because they're going to come in again and probably front run that area, right? Because if I was a seller at 66 quarter before and I went long again, I'd be a seller at 66 quarter, but I'd probably sell a little bit before, right? To capture that buying. Remember that sense of urgency, right? So as soon as you're long here, right, you want to sell into that strength. And you want to sell into that strength. Oh, somebody's competing with you. Oh, let's get out of it before they take your customer. Because right now, that's what they're doing. They're taking their customers. Yeah, we got some more sellers. Let's see what happens now, Johnny. Yeah, focus on the offer, right? Exactly. Right, and you got some trap longs above there too that are not helping. Now let's see how much of a break we get. Come on. Brought in some buyers, right? Brought in a few buyers. Let's see if they persist. So for me right now, there's no trade, right? If you are short under 62, that's fine, right? If you are short, your stop would be there and your target would be 56 and three quarters. We're trying to find the bid somewhere down here, right? Where is it going to be? Here we go. Okay, that's a nice orderly little sell-off. Come on. Exactly. Discounting is the process that we use to find the bid, right? So you're actually right, right? It's just you just reword it. Discounting is the process that we use to find the bid, right? They won't buy it here, they won't buy it here, they won't buy it. Ooh, there's lots of buyers down here. See? And then when we find those big buyers, the offer will start to lift or go up. The best indicator for a day trader is to watch the offer because the offer will tell you if there's buying in a market or not. Right? If there's no buying in a market, the offer will keep going lower and lower and lower as it fishes for the bid, right? When it finds the bid, it's immediately going to start moving higher to see if those buyers will follow up, follow and pay higher. If they don't, the offer will come back down, just like it's doing right now. As I'm saying it, it's actually doing exactly what we're talking about. I haven't used Thinkorswim in, oh man, I think it's been at least 4 years since I've used it. And I just used it it was a friend's account in the States because when I was living in Canada, Thinkorswim was owned by TD Securities. And believe it or not, TD wasn't licensed to trade futures in Canada, which makes no sense at all. But no, I don't use it at all anymore. At one time, it was a hell of a platform. I just use Sierra Chart. Ah, uh, apparently there is a way to get it to draw rectangles. I can't remember. Somebody just learned it last week. So if I find out, I'll DM me and I'll try and put you guys together. Somebody had the exact same problem last week and solved it. I can't remember what he did though. Just wondering how long it'll be around. It's owned by Schwab now, right? Yeah, TradingView works fine. Hey, Raj, what was that? Uh, little copy and paste action there, eh, buddy? Oh, man. And now it's pretty much down to a crawl. Raj says you can also right click and activate, which allows you to grab a point and stretch it out. Oh, oh good, you're using Ninja. Cool. Yeah, I hear a lot of good things about Ninja Trader, so wouldn't mind trying it one of these days. Ah, thanks, Raj. That's very cool. Break of 56, looks for 54. That's right, Ninja's owned by Kraken. Actually, for Ninja, our room is one of their educated rooms. If you look on their website. If you go to ninjatrader.com, we're there under Microefutures. Wow, that was quite a liquidation. So where's who was asking about the pinata? Is it Johnny? It worked. When we took out that K low, that was quite a liquidation. It took some time, right? At first it brought in buyers and then the sellers just planted it. It's good to know. So now what we do is you do the discount level. Good call, Johnny. Good call. Nice work. Beautifully done. And this might be a look below and fail of 51. Let's see if it holds 51 and a quarter. There's a seller right here, eh? Yeah, anybody who bought that 60-60, they are not a happy camper. Let's see where the bid comes in. It's a new overnight low. Right. Just remember, if you're thinking of a long, there's going to be sellers at 54. So make sure you govern yourselves accordingly, okay, folks? Be careful. Sometimes a level depends on how quick the buying response is. Needs time to clean itself up. So if you bought 51 and a quarter, 51 and a half, you know, sell your contracts. I'm just scalping out at 53 and out at 53 and a half on that trade. So what I did was I went long 51 and a half, 51 and three quarters, and then I sold right before. I told you guys that there'd be a seller here. I sold before the seller could engage. Not the greatest trade, but a quick little look below and fail. Now let's see if that overnight low holds or if it gets knocked down again. Let's see where the next area of stops are. So here's the thing. The next structural set of stops is really 60.32, right? So be careful going long here until we get back up over 54, right? I would wait until this level is established because we don't know what bids are here. Yesterday's move was a pure short squeeze. It was a short squeeze caused by the fact that people were trying to cover the old contract, which forced up the new one as well. Okay, so those moves tend not to have any follow through behind them, right? Nice work, Amar. Nice work. Well, folks, that's it for me tonight. Let's see. Can we get back over 51 and a quarter? I haven't even looked at Bitcoin today. How's it doing this morning? 106. Giving back a little bit. Okay. Any questions? I want to thank you guys for joining me. Appreciate it. Please come join us at the Trading Syndicate. We've got a great community of traders. Use the discount code in the banner below for 25% off. It's only like 50 cents a day. That's where I teach and trade every day live. And also, folks, if anyone's interested in one-on-one lifetime coaching, I have some spots coming up. Contact me anytime. I really appreciate it. Also, if you want to learn how to trade with other people's money, use the description in the description of the video. Our friends from Apex have some good deals going. Please give it a look. Thanks, everyone. If anyone also, let me say this, if anyone is interested in mentoring and one-on-one coaching, let me know. I'll do a free hour call with you to assess your needs and see how I can help you in your trading journey. Thank you, everyone. Have a wonderful morning. We'll see you at 9 p.m. Eastern Time. Trade smart out there. Thank you. Bye for now.